Hello everyone, welcome back to Forex Trading Made Easy. So today we are going to dig deeply into trading strategies properly. Now, in the last course, we talked about creating a trading strategy. So earlier in the course, I was talking about putting it all together. Now, you don't just use one particular trading method to determine entries and exits. It is important to use what we call a confluence of factors. That's one or two factors that will make you see direction in the market. Those factors could be technical, it could be fundamental, it could be a combination of both fundamental and technical analysis. Okay, so for the purpose of what we are going to be treating in a short while, I need you to understand what I said earlier. I'm going to be sharing two simple strategies that I use to make profit in the Forex market. Now, before I delve into it, please note that there is no trading strategy that will win the Forex market 100% of the time. What I mean by that is you will not win the Forex market every time. There are some times you might encounter some losses, but it means that overall you should have a trading strategy that has a high probability. That word is very key, probability. But you need a trading strategy that has high probability. The odds will always be in your favor. So today we're going to start with the intraday trading strategy, where we are going to be looking at some examples and swing trend following trading strategies, I meant to say. Now, like I said, I'm going to be showing us trend following strategies, and I'm also going to be showing us um, trend reversal strategies. Now, for the trend following strategy, I'm going to be using just two indicators, the period 200 moving average and RSI default setting. The default setting is 14. Okay, the only addition here is the 50 level. And this trading method is simple. Okay, anytime price is above the 200 exponential moving average, what it is showing us is a possible uptrend. Remember, we talked about trends, price forming higher highs, higher lows. So what we do for trend following strategies is to be able to pick trades in the direction of the trend. So for example, price is in an uptrend, and whenever we see this price above the 200 moving average, we want to remember the RSI. We discussed it earlier, and we said that 30 and below is the oversold region, 70 and above is the overbought region. So if you want to mix it together to have a possible high probability oscillator, high probability strategy, what I recommend is, for this price above the moving average. Remember how I described the average? This is the average prices for average candles for 200 period. The period is the time frame, each candle. So this is 200 period moving average, and this is default RSI. So when price is above the moving average and this gets to the oversold region, the entry should be the next major bullish candle should be a buy. And as you can see, this buy went all the way up. One way to exit this is to put your take profit close to or by the next bullish candle. Remember, in an uptrend, it is usually expected that price will form higher highs. So usually, as a rule of thumb, it is expected that price should get here, but nothing is cast in stone. But you can build your strategy. You can, okay, say, oh, I get the idea, I get what Chinedu is trying to do here. Maybe I'll try another indicator, but I'm just giving you an idea. So this way you'll be able to ride a trend. Now remember, if you're creating a trading strategy, you need an entry, and an exit. Now, when you have an entry, we have an entry, the exit is in two ways, when you are right and when you are wrong. So I mentioned earlier that when you pick a buy, for example, price is above the 200 moving average, and at this point price got to the oversold region, the next bullish candle, the entry will be here, and then you can ride this. You see already this had moved over 57 pips on the 1 hour time frame for USD JPY on this day. Now what you can also do is, when you set a take profit here, you will see price touching, uh, most times touching that take profit. Alternatively, you could find manual ways or mechanical ways, if you must, to exit your entries. Now, like I said, exit has to be in two ways, when you are right and when you are wrong. So let's say you put your take profit here at maybe somewhere at the previous high, or you just use, anytime this gets to either overbought region again, you exit, or you can just say anytime it crosses above 50 and you see some bearish movements here or there, you can take that out, but have defined entries and defined exits. Now the second exit, I recommend that you exit this position if you are adopting this strategy anytime any candle closes below here. Now what this does is help you ride in the direction of the trend. So there is always this talk, always trade with the trend, because the trend is your friend. Okay, so this is a buy entry for this example, and we are going to quickly look for a possible sell entry using the same example. So where you get to find the reverse of what we just discussed. So I can find two here. So look at here, price is trading below the moving average. And what did you see here? The oscillator touched above the 70, the overbought region. The next bearish in this case, remember in buy, it was bullish. So the next bearish candle, so this is overbought. The next bearish candle, you take your sell order. Now the sell order, you see that price moved in a bit from the time of entering the sell, and you see that price did about uh 150 pips from here. So you can choose to say, okay, I'm putting my exit at the next possible resistance or support level, and or use a mechanical means, say when this closes below, yeah, you can say when it is oversold, but most times you may not get here, but you can say when this enters here, exit in the next possible level, which price comfortably took out around this region, or or excuse me, you can say, okay, let me uh exit on the next bullish candle after the RSI crosses the 50 level, but have a defined entry, defined exit. Okay, so this is a possible way you can follow the trend. So you see, we are combining two trading concepts, the overbought, oversold region, and we are combining the trend following. So you're riding in the direction of the market. So you can also look at other confluence of factors to make your trading much more robust. Now, what I want to tell you about creating strategies, it has to be simple. Most of the things that a lot of traders do, making it very complicated. Firstly, you will not see trades regularly when you want to make it so filtered. And secondly, you will eventually still not win all of your trades. So keep it simple and make sure you win much more than you lose. So you can adopt this strategy. It's very straightforward, and you use it in your trading. We are sending signals based on this strategy in our Telegram community. You can see another entry here, price below the moving average and the oscillator RSI in the overbought region. The next bearish candle, you see price riding all the way down, and you should have a defined, maybe your TP at this level And anytime any candle closes above the swing high, you close the trades, okay, or probably put a stop loss above there. But there are reasons why in the future article publication I'm going to be doing, there are things that I'm going to be sharing with us that will help us understand why I am not a very big fan of using stop losses. And we'll discuss this in the when we discuss risk management in a few courses from now. So we're going to talk about risk management. In the next course, I'm going to share with us a very simple idea for a trend reversal trading strategy. Okay, we are getting into the main dish, and I'm sure you are enjoying this. Click the link at the description of this video and get free signals. Let me excite you. The signals we are sending is based on this particular trading strategy that I just discussed today, especially on the 1 hour time frame, 28 popular pairs. Okay, so click the link at the description of this video and get notifications whenever we drop our signals. See you in the next course. Bye for now.